Natural gas last week, failing to stay bullish above 2.7, has seen a good drop and gave higher lows, lower highs. Remember, it was trading overbought as we discussed in the last video. However, it is still bullish. So what to expect next week? Can we expect a rise from here, or is it going to give you second red candle from here? Which position you should take in order to profit trading natural gas? We will see with the help of charts followed with indicators, and towards the end I will give you the trading levels and strategy. Do watch till the end. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon which keeps you updated with the live market analysis. In fact, twice a day I share my analysis and targets for the natural gas. First with the Asia session, next with the US session. To watch both. Also, you can remain updated by joining our free Telegram channel. Link is mentioned in the channel and video description. Let's start first look into the weekly chart. See 2.06 levels, triple bottom is seen here. Very strong consolidation done here, and since then we have seen a rise. I was bullish into 2.06, told several times that till it remains about 2.06 one can expect a rise. Precisely 2.8 were the targets. 2.8 is done. Now see, it is still trading in very much in this bullish channel. And if you look at the pattern here, see three bullish candles here, then a retracement, couple of strong bullish candles, then a retracement. So is it going to go high again? Let's have a further detailed look. If you look at the last week's movement, specifically higher lows, lower highs, it means that once it stays below 2.4 levels next week, you can stay short there, or rather 2.38, 2.36. This zone is very important in between 2.4 and 2.36 levels. Till 2.36 we can expect a bounce back, but below 2.36 there could be another round of good drop which is going to take it till towards 2.3. Now 2.3 first target, 2.2 second target. It can give you second red candle here if it continues to stay below 2.3638 zone. Then it is going to give you second consecutive red candle, else a possibility of a recovery exists. It can open here and continue to trade bullish and consolidate within this zone. That is the first possibility. Remember, it has formed a base and hence it is still to be considered bullish. It is still to be considered trading in this upward trend. Now let's have a look at the daily. On the daily charts, see this was a good bull run here, and at this point we had discussed last week analysis that this is potential reversal sign where it may try to trade with a slight bearish bias. This is in fact breach the support levels on the downside. Now remember, 2.5 2.6 zone is something we have to look forward to only and only if first thing is 2.5. 2.5 is a very good resistance now, and then 2.6. These two levels, only if net gas stays above these two, you can consider this to be a bullish move and it can reverse again. Now specifically look at last two candles. See a sharp bearish candle here, and then the last trading session we had a very small candle with a very small body. This could be a potential reversal sign if and only if net gas goes above 2.5 on the very first or second trading session. Then you can consider that it may try to reverse from there and rise from here. So what could potentially happen is it can try to create a symmetrical candle here and then follow with a reversal. This is one probability which can happen. However, if you look at this trend on the daily charts, you will find this is still trading in this bearish channel. The highs of this channel are somewhere at 2.5 2.55 levels you should watch out for, and the lows at around 2.3. So in the near terms, that is the next week, we have to be watchful of this zone completely. That is the first point on the daily charts. At the same time, we have already seen, yes, there is a strong base available. Even if it tries to retrace, see, you should track the formation here: rise, lower highs, retrace, higher lows, higher highs, higher lows. And if you just connect the dots here, you will find till 2.2 it has got very good support here, and on the long run on the daily chart this is an expanding move here. Possibly it can try to again reverse from achieving 2.3 2.2 levels in the month of June. That is the point where one should remain watchful. Now look at the monthly. On the monthly charts, flat bottom for 4 consecutive candles. This is a very good sign of consolidation. This is a very good sign of support, that it is not willing to break below $2 levels. Yes, these are very good support levels for now, for near term. Second point is the monthly candle. If you look at the monthly candle, see 2.06, 2.8 and the doji movement or the pivot levels at around 2.42 levels. Precisely, this is where the doji stays here, and this can try to close the month at around these levels, ending in doji at around 2.4 2.5 zone. Possibly it can try to stretch here, and then now see, the next monthly candle will also start this week itself. Remember, so far for the month we have seen lower highs for last 4 months and a flat bottom. This should be still in consolidation. Any move about 2.8 next month should be treated for a very good bullish move here. You can see this. If it can drop sharp, there is a lot much of liquidity gap left here, which needs to be covered on the monthly chart. There is a gap also here at around 4.5 levels, which also needs to get filled. Possibly staying above 3 levels is what we should look forward to, because that should become a support. You can see this was the previous consolidation zone from where the rally has started. Now it has formed lower lows, and hence it can try to retrace a little on the upside. Now we have seen the charts. Let's have a look with the help of indicators. What are the indicators are suggesting? That is also going to give us a clear picture. Now look at the monthly chart. The prices diverge from the 20 period moving average here, and hence the conversion here. Now this time, see, the moving averages were also trading with divergence. They have started to converge. Remember, on the monthly charts they have not yet crossed over. Remember, on the monthly charts it is trading well below the 20, 50, 100 period simple and exponential moving average. That is a bearish sign, and hence this zone from 3 to 4.5 becomes crucial for net gas. It has to stay or break past these zones in order to convert into a reversal and a point from where the divergence could take place. Super trade is still on sell with a so far away levels at $7 on the monthly charts. Also, if you look at the stochastic, see, the monthly stochastic has come to oversold levels on the monthly charts, and see, this is happening with a sharp bearish movement. We can see this was the time when it is at the bottom, a reversal, a bottom and a reversal. So net gas achieving those levels always try to show you a reversal on the monthly chart. This is the time where it has stayed here for a couple of months, and then this reversal has happened. Hence, possibly, now see, this was the bearish streak here. This is the bottom. After achieving the bottom, it stayed for a couple of candles, consolidated, and then a sharp reversal. So same thing we can expect here too. Possibility of a reversal exists. It might consolidate it for a monthly chart or two, and then a reversal. Reversal is hence very sure. If not this month, then next month. If not next month, then next to next month. But reversal is a very sure movement here. But look at the MACD. Now see, MACD on the monthly chart, it has crossed over here after trading bearish in 2020 COVID times, and then since then it has diverged, it has stayed bullish. And see, in the year beginning I have released my analysis. I have told you it has crossed over and the prices might remain lower, and see, beautifully it has crashed. Now you can see the body size of the candle. See, it has achieved extreme higher levels, and now they have started to flatten here and or trying to trade with a diminishing body size, and hence possibility of conversion from here exists, which means we can expect bullish candles from here onwards. And hence, see, by only 3 trading sessions are left, out of which Monday, that is the first trading session for next week, is a holiday for UK and US, and hence we can see limited movement there. At the same time, beyond 30 and 31st, where it might show you a little swings, first a little drop towards 2.363 levels, and then a bounce back, a recovery till towards 2.4, and then 2.5 to 2.4. So the 2.3 to 2.5 zone, it might try to stay within, possibly closing the monthly candle at 2.4 levels, and from there the next monthly candle will take on a bullish note, and hence you should keep a note of it. Now stock RSI is also seen the drop there. It has come to comfortable zone, neither bullish nor bearish. Now look at the weekly. Now see, on the weekly charts, the sharper rise there, the divergence, price divergence from the 20 period moving average, then the sharper drop. Again the price divergence from the 20 period, and the moving averages have diverged enough. You can see this, and that is where the drop has started to take place, and since then net gas has dropped significantly. Now if you look at the price gap, the gap between the 20 and 50 period moving average is also significant here. At the same time, it is still far below the 20 period moving average, and hence it has to converge, it has to rise for next couple of months or so. Possibly we can see 3 to 5 or in fact $6 levels. You can see it hitting those levels in a faster manner, and possibly this monthly candle where it closes and the next closing opening is what I will wait for. Now also look at here, so far it is giving you lower highs and a flat bottom. It has to stay above 2.8 levels and 3 levels, then you can say that it has reversed and then more bullishness is going to prevail here. Right now it is in a phase of consolidation on the weekly charts. Stochastic has seen a little rise. The MACD, now look at MACD on the weekly charts, it is diverging here. It is divergent and it is bullish, and this is happening after a series of long bearish move. It has achieved a bottom at C minus 1000 levels. It has never achieved a plus 1000 level. In fact, when it was trading at close to $10 levels, it was not at this level, but this time it has breached minus 1000, and hence possibility of a recovery exists, and possibility of a recovery exists is strong here. RSI has also come out of the oversold zone on the weekly charts. Now look at the daily. On the daily chart, see very good support here at this zone 2.4, 2.45, and then 2.3 till 2.3, 2.2. Very good support exists here. The super trend is still on a buy side on the daily chart. The support they're coming into picture at around 2.3, 2.35 levels. These levels are going to remain important for the coming week. Also, if you look at now here, the moving averages have crossed over. The 20 and 50 period moving averages have crossed over, started to diverge, but not yet completely bearish as of now, and hence possibly couple of bullish candles, and these may cross over again, trading into the buy side right now, giving a support. The 20, 50, 100 period moving average is giving it a support at around current levels till 2.3. It has got very good support. Stochastic with this drop has again come to oversold levels. The MACD. Now this is one point. Now on the daily chart, there is a crossover seen on MACD and it is starting to diverge. This is the first red candle, and hence we have to be extremely watchful here. If it continues to diverge, means couple of red candles, which means it can try to drop for next couple of days. Let's see 2.3, 2.2 levels, and I do see a support, very strong support for net gas at around 2.3, 2.2 zone. Very good support exists there. Only if it stays below 2.2, I will call for further bearishness, and I will expect it to drop sharply for 2.1, 2.06. But till the time it respects 2.06, do not consider natural gas as bearish. Once again, I am telling you, till the time it respects 2.06, do not consider natural gas as bearish, because below 2.06 we can see a very good fall for 1.8, 1.5 levels also. Hence till 2.06 I will remain bullish. Yes, on the daily charts potentially it can try to retrace a little, however on the downside is very much limited. RSI has also seen a good drop. Now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy for you so that you can make profits trading natural gas next week. And before we proceed, if you want to learn this art of trading profitably, you should join my mentorship batch. 22nd batch starts on 5th of June. Register yourself now itself. Reach out to me for more details. Equip yourself with right tools, techniques and strategy which can help you become a profitable and proficient trader. The help of strategies by which you can identify your potential trade, trading any of the commodities, be it gold, silver, oil, net gas, or indices including Dow Jones, Nasdaq, and UK, Europe, and also forex, cryptocurrency, anything you can trade with the help of those in strategies. So reach out to me for more details. My Telegram and email IDs are mentioned in the channel's and video description. Also, you can find my signals channel to be helpful, where you trade just as per the signals, and definitely you can benefit. Reach out again to the Telegram and email IDs for more details. Now, where to buy? First, we'll talk about the levels to buy here. See, you can buy here at 2.45 levels, and then 2.5 first, very strong resistance level, and then 2.55. Now, till, as I said multiple times, 2.55, 2.6, this is the zone where you need to focus the most here. This is the zone which it needs to break past by. I think potentially there could be a little drop earlier before looking forward to a rise. However, this is going to be a stronger resistance zone, because this time it stays above this. You can potentially again expect 2.8 levels here. In between this, 2.65 is also something which you should watch out for. Beyond that, 2.8 is certain, and beyond 2.8 this time in the month of June, you are going to look at 3.5 levels. Remember this fact. I am still bullish for the next month, and hence any drop you see till towards 2.2, 2.1, that should be a good buying opportunity for. On the downside, where to sell? I will recommend you to sell here at 2.38 levels, but then 2.35 first target, and then 2.3. till 2.3 it has got extremely good support, and only if it trades below 2.3 you can expect that there is going to be further fall. See, 2.3 I don't see it breaking, but 2.3 is certainly going to remain a good support. Below that you can expect 2.26, 2.22 and 2.2 levels as the next targets. This is going to be the next target, and below that you may see a very good fall. I don't see it happening, but these are markets. I have to give you the levels: 2.1, 2.06, and till then also it can bounce back. You can consider this is in a flat bottom and expanding triangle for the near term, though in long term it is a descending triangle, and hence the zone between 2.7 2.8 remains crucial, where it can try to transition above the descending triangle and remain bullish. So take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. Do not forget to like, share, subscribe and comment. Join my mentorship batch and signal channel. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.